Set up to go live here. People come on as they come on. It's Friday. I'm start the stream now. Stream should be up here on YouTube. So as people get filing in, we'll go through some questions, look at some charts. Specifically, ON is kind of what everybody's been talking about today. We got a great move today on DraftKings. Penn finally deciding to join up here. Look at that. Eli, if you're here, do you mind, I should be live on YouTube right now. You mind throwing the link in the channel so I can copy it? Unless you're not here. Rip. First time I ran this 50-day scan, 50-day high scan, when I came back during the lunch session, there's only 100 and something names on it. Now there's 200. So obviously the market's picked up second half of the day. Landon, turn that off right now.
Scary.
Landon, turn it off. I'm streaming. I'm streaming and it's going to lag the stream, Landon. Turn it off. Do me a favor, Eli, and post the URL of the stream in Discord so I can copy it.
Give me 1 second.
No, Landon, it's just that it lags the stream if you're streaming in the background, Landon.
You're good, bro.
Discord takes up so much.
I was just trying to figure out how to do a filter on my green screen.
Oh, dude, yeah, we can figure that out when the market's closed for sure. I'm going to stick around for about an hour.
I'm going to try to pretend I'm in NASDAQ trading on the trading floor.
Yo, we got 237 50-day highs today that are changing up from the open. When I first ran this scan, there was only 100 something. So I'm going to go through some of these. There's a lot of ETFs. Let's skip through all those ETFs. I'm surprised at how many names popped up second half of the day, man. A lot of biotech again. A lot of biotech. Holy smoke. A lot of industrials. Look at industrials. Industrials are ripping. REITs are ripping.
Basic Materials ETS was posting it earlier. VYM.
If it was prior to lunch, I didn't look at anything. So feel free.
Someone I was talking about VYM and PAVE, and I looked at it because of Fastenal is like breaking horizontal levels, and I just hadn't looked at that ticker in a while. I was kind of curious.
I traded PAVE, right? PAVE, the Global Infrastructure Development ETF. So I traded that in 2020, going into 2021, and it was a huge letdown. I don't know if I'd lock up any cash in that. This thing moves so slow.
Yeah. I wouldn't trade the ETF, but you'd have to find a volatile name within the ETF that's moving, I think.
Yeah, I agree.
Up in that sector.
Thanks, Eli.
Yeah, I get what you're saying, though, because some of the sectors are just, as a whole, they're really slow movers. But then there's like a couple outliers in the sector that are just like stupid growth or like momentum stocks.
Yep. Yeah, they're it's hard to trade when things don't move that fast. I remember last year I'd sat in PAVE for like a month and a half or 2 months straight, and I ended up closing it for like a 30% win, which if it was like equities with size, yeah, that would have been fine. Well, maybe not fine considering 2020, everything was going crazy, but it was an options play. It was the tail end or something. It must have been 2021 because I didn't have my options account in 2020. So I traded it in 2021 and I was sat in it for like 60 fucking days. I closed it for like 30%. I'm like, yo, this is stupid. Like what a waste of capital at that point.
Yeah.
All right, I'm going to go through.
Weird is sometimes those like slow moving things too, like I'll get in and then I'll be right. And I'll start making money on the option, and it'll be up, and then I'll be like, okay, I'm going to keep holding this. But it's like such a slow mover. I feel like the actual underlying, especially in an ETF, like the underlyings that are making the ETF move, are moving slower than the value of your premium is increasing. So like your premium just gets burned while you're waiting for the slow move to start ticking up.
Yep. That's unfortunately part of the process when you're trading options, man, there's a million different variables you have to keep in mind that you don't have to necessarily worry about, at least in terms of how much actual cash you have. In equities, if something moves sideways, it sucks because you're not making money, but you're also not losing money, right?
Yeah,
The only thing you're burning is opportunity costs, whereas in options,
like,
yeah.
That's what I found. So like when I'm up, especially like really big and like a slow moving like sector, like I think a good example would be my General Mills. I was up really big, not huge. It was up like 30-40% like within a few days after buying those contracts. I locked in a little bit of it, but then I let my runners go. And I mean, if I would have kept the whole position, I would have closed at a complete loss. I think my runner ended up canceling out my first win and made me like break even on the trade. But like that was such a slow moving trade. It's like nail every day, and then one day it will just have a big move, and then that's it for like who knows how long. It's so weird. It's like just enough to keep the options going.
Check the equal weighted ETF I just posted in Discord, RSP. If you're watching this on stream, this is an equal weighted S&P 500. This is testing the 200-day moving average. Matter of fact, I'm going to tag a mic in this because this is TD. This is something that these two guys would probably like to see. This is an important development, to be honest. SPY is still a couple percentage points off of the 200, currently trading 426, 200-day moving average. It's 432, actually. It's only 1.4% away from the 200-day moving average. Kind of blows my mind. RSP is right there, though. So in the broad scheme of things, the market is testing the 200-day moving average. Like, we've followed the same classical idea that most technical traders that actually know what they're doing are, and that we don't necessarily love to buy with size below the 200-day moving average, just like we don't like to short with size above the 200-day moving average. What happens if we pop up and over that 200-day moving average? By almost every metric, we will have flipped that primary trend to up. 200-day moving average is not necessarily something that we preface every trade off of. It's not even a part of our system, actually. But it is an important indicator because everybody else says it's an important indicator. And sentiment matters in the market. Above the 200-day moving average, more good things happen than bad. Below the 200 moving average, more bad things happen than good. So we're right there. That's pretty fucking nuts. What are you looking? You're just looking for a smooth moving average? Just type in SMA.
Okay.
Yeah. QQEW is almost there too. 2% away from the 200-day moving average.
I think there's one that has like 3 different moving averages in one indicator too, which would be useful.
I have that. It's the... One second. Have I been using the... I've been using the EMAs this entire time? Is this fucking joke? What the... Have I really been using EMAs? I recently re-added all of the indicators because my trading view fucking restarted, but I did not realize that I was using EMAs on this bitch. Maybe this is why... Well, here.
No, you've had SMAs before because I've looked and I had one EMA and it was off.
No, yeah. I just redid it though, like within the last week. So that's probably what it is. One second. Let's change this to the 200.
It's such a pain to do that.
Yeah, it's...
That's not a smooth move.
Oh, no, okay. So even though this indicator says it's an EMA, it's not. It's definitely the fucking... It's definitely not an EMA. So...
You definitely want to use the MA ribbon on the... That's what I just figured out.
Yeah, whatever.
It has 4 different moving averages you can choose from, and you can change each one to either SMA...
You could just put 4 moving averages on. Do you pay for your trading view, or is it free?
I pay for it, but I ran out of indicators.
Oh, gotcha.
I have like one more slot open, so this is perfect for me because I can get all the moving averages I wanted.
Okay, so let's actually, before we start scanning, let's check Twitter really quick and see if there's any news. Okay, let's talk through current trades that we're in. Anybody want to start? Anything that you guys need to manage before the end of the session today? think the majority of us are sitting in some awesome positions, and we're not necessarily looking to close. Hanno is going to hop on probably in the next 15 minutes. And I think he has something here. Let's see. Marcos, did you end up closing your UPS trade?
I think he said yesterday he did.
Yeah, I closed it yesterday.
So you're completely out of UPS, and are you completely out of UNP as well, or do you still have some exposure?
I still have one contract left in UMP.
Cool. Okay, just making sure. So I'm going to write up this UPS trade review, and I'm going to post it on Twitter so other people can see it as well. Do you mind? You don't need to screenshot the percentage profitability if you don't want to. Was it near that previous screenshot that you sent? The Robinhood?
Yeah, that was.
Okay.
It was a little. It was like 98% or 96% gains. So it was close, but.
Okay, cool. Well, congrats on the UPS play. XLI right now is fucking screaming up and over the 200-day moving average. Industrials are just fucking killing it.
I did a quick screen of relative volume over 1.5 and average volume over 1 mil. And Optimus is Disney. A couple other notable ones.
I'm going to post these quarter-to-date charts on the sectors and industry stuff. I don't know. It gets old saying we fucking nailed it, but we fucking nailed it. Sal, did we nail it or what? Are you feeling good about this move over the last 3 or 4 weeks? I feel like we fucking killed it. One of the only public groups, I guess, if you will, that actually post stuff online and gets roasted if they're wrong. We haven't been short in longer than 4 weeks, actually. It's not me, it's us, right? We nailed it. That's nothing to you guys sitting here with me every single fucking night. We came up with these ideas as a group. So look at PBW, man, up 41.38, 41.39% quarter to date. PBW is only 8% away from hitting positive after being down nearly 41%. Absolutely fucking crazy to me. Let's go over to the U.S. sectors on the year to date. Energy's actually doing a little something here. Look at that. Energy's actually doing a little something. Series of higher highs here on the quarter to date, potentially transferring over to the year to date. So something we should probably do in the near future, probably Sunday night session. We'll go through energy and rechart a lot of these names, because if we do start, we're right there at potentially a higher high for the second oscillation in this secondary trend. Update those charts. Maybe we'll be buying energy again. It's not something I necessarily want to do, but looking at the quarter-to-date charts on these sectors, and we fucking killed it. XLY. XLY, XLY, XLY. You guys remember the ticker for consumer discretionary equal weight? RCD? Yeah, close enough. Up 21% off of the lows, and XLY is up 27%. So the entire reason why we look at that, right, equal weight, non-equal weight, is that the entire fucking consumer discretionary sector is popping off. It's not just Amazon and Tesla, which is what most people probably, those are the only two fucking names most people think about when it comes to consumer discretionary, right? So the entire consumer discretionary space is up 28% off of the lows in the middle of June, which is just wild to me. Apple's up 2%. We've been talking about Apple being close to all-time highs for the last week. We are currently only around 6% away from an all-time high. 6% off of the all-time high. Apple needs, we'll say, 6.5% all-time high. We're that close. That's what most people, in my mind, they're still bear. They're still bear. And maybe we are still bearish. I don't know. Until we flip that 200-day moving average, realistically, a majority of the market is going to say, if you're technical, right, you should be more short biased than long biased if we're underneath the 200-day moving average. It's hard to argue against that, but obviously there's semantics in there, and there's different things that we can look at in market breadth and shit. But the risks are still against bulls as long as you're underneath the 200-day moving average. It's kind of a traditional way of looking at how to use an anchor moving average, and I tend to agree with that. But keep in mind the fucking biggest stock in the goddamn world is only 6.5% off of all-time highs. How can you reasonably argue that this, whatever this mini rally is not legitimate, right? Apple, off of the lows at 129, is now at 33.29%. 33%, and we're 6.5% off all-time highs. I mean, Shout out to Wifey Alpha on Twitter. Used to go by volatility, quantity or something like that. He's just a mega bear on everything, and he's grown this huge following, basically posting doom porn all the time. What do you think he's doing right now? I bet you if you go and you check his Twitter, he's still screaming that this is a fake rally and everyone's going to get burned. Meanwhile, Apple's up 34%. 34%. It's crazy. People will short until they go broke because they're like, it like rots your fucking brain. Ethereum up 2.2%, nearing a 50-day high. Yeah, it's a think trap. You're absolutely right. IBM pressing into a high a day. Yep, totally agree, man. Have you read Atomic Habits?
Yeah, I've read a lot of it, but
It's
this book was a little more.
Fucking phenomenal.
Atomic Habits was good, but this is more like, I don't know, I feel like it's more like a scientific.
When Mike hops on, he's in a few of these fucking names that are screaming today. Look at Affirm. 50-day high in Affirm.
Hey, I got one.
Mike's still in this. I bet you Affirm's up 110, 120% when he hops on. We'll ask him. What's up?
This company makes like restaurant software, ordering software, menu software that will help
TOST, right? Yeah, I saw it on, somebody was talking about it on Twitter.
kind of like it's BRBing right now. Like it's basically a big handle today, and it's like at the.
Yeah, I'm looking at it. This is a mid-cap software name with 6.34 ADR. Probably not something I'm particularly fond of trading, but yeah, why not? Where's the BRB? I think that's the most important part. What level are you looking at to buy? I have it marked off on mine, but where are you looking at it?
Probably, I'm looking at a candle chart right now.
Oh yeah, so am I.
Probably like 21 minutes. Take it.
Oh, so you're looking for a breakout because right now we're at 1982. So you're looking for a breakout above a previous resistance area? Because what I'm looking at, I'm going to post it in Discord. Very, very, very obvious level here that we shifted.
20.
Look at mine. My level's at $17. We came down and tested it in February and March.
We already broke
Broke it. Yeah, we broke it, trended below it. We oscillated below it, and we had a bear momentum regime underneath this level, and we just broke above it. Yeah, so it is an SR flip. It 100% is. Whether or not this pulls back all the way down to $17, you can argue that it won't, and I probably would agree that it doesn't. But where would you take it from here?
If I was like looking at this and I had just learned about BRBs, so I try to make a BRB, I'd say you're saying like if I was looking at this like a BRB, it hasn't retraced yet.
Well, the problem is it's retraced a lot. The problem is that we opened up at 2173 and we're already down 8%. So for this to be a BRB in our system, it would need to fall another 13, 14%. Is that realistic? Probably not. This would have to fall 2 or 3 days in a row after today for it to become a BRB. And at that point, do you still want to buy it if it's in a 4-day downtrend? So I think DOS is just, maybe it's a great opportunity, but for us and within the TTI system, this is something we would probably avoid from a risk standpoint. I would take this as an equity anyway. Why would you not? That's another thing for anybody else that's listening to this stream. Dude, if something's trading under $20 and it's like a small cap, a micro cap, and in this case it's a mid cap that is probably a small cap again just by like $500 million. No, always go equities. Like, why would you want to introduce the risk of IV and theta? Limit orders, that's completely different. That's just an order type. That's an order type. We're talking about options versus equities.
Listen. Use it as a limit order to get into your equity. Like a lot of people use option. Like that's the whole point of an option. It's to give you a better price on a theoretical price on your future.
Listen, dude, you right now are talking about holding or executing options contracts, holding till expiration, executing, or straight up just fucking execute. People don't do that, bro. Yeah. Okay. If you,
options to get into equity positions.
Yeah.
Or to get out of them.
Not the people that are listening to this fucking stream, and either do we. We don't do that shit. If you're trading, that's not what you're doing. You're not doing that in here. That's completely different. That's a completely different.
Why would you buy options? You're right. I wouldn't buy options on this. I would probably sell them. Or I would maybe buy a lotto
So if you want to sell them, that's what I'm talking about, though. IV is at 83, right? You have an 83 IV, which means you're going to have to spread this. Otherwise, you're going to get fucking crushed by IV decay. And you have theta. No. God damn it, Landon.
No, it theta. Dude, IV decay is not going to get you if you sell a call. If I sell a cover.
Yes, I know that, Landon. Your brain is like in fucking Jupiter right now.
We're having a misunderstanding.
Yes, we are.
And we're like arguing over nothing. So.
In this group, we do not buy options contracts on things that are under $20 with jacked up IV. That's the end of it. If you want to do it on your own, feel free. We would prefer to buy equities because you don't have to fight the Greeks. That's the whole fucking argument.
I 100% agree with you.
Thank you, Jesus Christ. Okay. But yeah, if you want to say,
I'm doing what my mom told me to do. If you don't agree, just fucking lie, and people will like you more, Landon.
Oh my God, we're not fucking degenerates buying like. You remember in like the beginning of 2021?
Understanding me. Where's Mike? I need some backup here. Mike, give me some backup, dude.
No, dude, I'm talking about something completely different. Remember, like in 2021, when meme stocks were going crazy and you had like Atlas trading and everybody shilling all these small caps and stuff, and you had like the options traders that wanted in on the small caps, and they were buying like $10 calls on an underlying that was at $2.50, and they were like, it's only $10, it's for sure going to go there. And I'm like, bro, for a $2.50 stock to hit $10, it's going to need a very considerable fucking move. And so you had all these guys buying these like quote unquote not that far out of the money, because to them it's only $7.50 away or $8.50 away or whatever the fuck it is. They don't understand like the percentage based game or whatever. So that's why like back when I saw people doing shit back then, who do you think was making all the money? It was the people that were selling the premium. Like, yeah, well, yeah, dude, if a stock is trading at if the stock's trading at $2.50, why would you not sell the $50 call for $500 credit? Someone's going to buy it, right? Like, fucking
Record, all I was saying before, and I wasn't saying anyone should do this in this group, or that we do this in this group. What I was saying was that if you wanted to pick up like 100 shares of Toast, and you wanted to not get them right now, but maybe get them at like $16, right, or whatever, you could buy a call option and use that as like your order, basically. Like, not technically, but like use that as an order, basically. If it hits, you're basically getting paid to enter into a position, equity position. If it doesn't hit, then you get paid.
Okay, I'm moving on because nobody's doing this shit except you, and I don't want to fucking talk about it because I'm not fucking doing it. I also don't want to own Toast. Check out those Bitcoin names. They're moving today. Coin's the weakest out of all of them. A few of us are in Riot. What's up?
I just spiteful ported Toast.
I'm currently up 90.5% in my Riot play. I grabbed a call debit spread the September 16th, 10-11. Bought the 10, sold the 11. I'm up 90.5%. I think Mike is probably up over 100% on these today because he did not spread it. He bought a straight call or a few calls. So good moves today from the BTC stuff. Let's look at the top 5 sector shit really quick. Let's see, for whatever reason, COP's up. So energy looks good. Staples. There's a few staples. Check out Pepsi, Landon. We're testing all-time highs again on Pepsi. Potential opportunity on Pepsi. So on Sunday, we're going to revisit this idea. We talked through Pepsi two weeks ago, I believe. I think I posted on Twitter as well. We're looking to take it on a breakout above 17750, and we never got the breakout. We never took this, but here we are once again visiting the same risk on level. RSI is still oscillating above the 50, so this is in the wheelhouse of something that we would potentially buy early next week. We want to wait for the breakout though, because it looks like this thing is trapped underneath some overhead supply at the 177, 177.5 area. So Pepsi back in the wheelhouse of potentially owning as of early next week. Let's see what else. Sorry if I just like breathed super loud into the microphone stream. UNH pressing into all-time highs. I don't think anybody has any exposure into mega cap
Quick question.
healthcare. What's up?
United Healthcare, right?
Yes.
Just a random question. You guys seen Optum Healthcare's pop up everywhere by you too? Oh, you're in Brazil, but
I was like, I don't know how to answer this.
I don't know if it's just like in my area, like or like SoCal, but literally Optum Healthcares and like urgent cares are fucking just buying every little urgent care and turning them into Optum, and they're fucking everywhere. And I didn't even know that's who UNH was until like yesterday. So.
Sherwin-Williams up. APD. Oh, wait, look at APD. Air Products and Chemicals. 2.36 up and over 200-day moving average. Not a set that we would take, but it's up and over the 200-day. Nvidia's up 4% today. Apple's up 2%. Like I said, Apple is super close to an all-time high here. Microsoft up 1.35. MasterCard, Visa. Check out the real estate names. Every single one in the top 5 is up. PLD, EQIX, PSA, CCI, and AMT, American Tower. Utilities have been showing relative strength for a few weeks now, which is pretty crazy to think about. A lot of the utilities names are going to have some crossover into TAN, though, so that makes sense, right? Disney up 3%, Netflix 2.53%. The Netflix trade that we had originally talked through, I don't think anybody took it. I don't think anybody's in Netflix right now, but so far, that risk on level and the BRB on the 9th of August playing out decently well. Netflix is up 9% off of that.
Because we have that gap down that we could possibly fill. It looks like it's breaking out today. I might wait till next week to see if we bounce or pull back.
I think this is a good opportunity to ask Eli, where would you be wrong if you took this as a swing? I think that's the hardest part.
If I were wrong,
Yeah, I would say sub 220, maybe 219.75, somewhere around there. But at that point, your contract's dead because you're down 11-12% spot. That's why I would not buy Netflix here at all. As a matter of fact, if you didn't buy it on the 8th or the 9th of August, this is a failed entry at this point, unless we start forming a new range to play a breakout. Because where we're currently at 249.12, our original stop on this Netflix idea was right underneath like 219-ish. And so we were looking at a potential 4 or 5% stop out on the original position. As of right now, you'd probably still want to use that same stop because we haven't formed a new range to give us a new level for a stop. So you'd be down 12% and your contract's dead.
Yeah, I would take Disney over Netflix.
Yeah, it's okay. Thank you.
no, I would wait for it to bounce, but also I would do equities, so it probably wouldn't be as bad as a drop.
It's true, but still from a technical standpoint, you always want to think about where, not only like where are you getting in and where's your price target, but where are you wrong? Because we don't in here, you might personally, but we don't run percentage-based stops where it's like, okay, I'm going to make 15, so I'm going to, I'm only going to lose 4.5. Like that's the max or whatever. We don't do that.
I only do that if there's like no clear like support, right? Or
Yeah.
it's like
That's true.
way too far off.
But we also try not to take those trades, right? We try to take trades where we know we're fucking wrong, because if we're expecting a breakout or a bounce and we don't get it, we just cut, right? So that's the problem with Netflix, and that's kind of why we were talking about it in Discord a few sessions ago, that on the 9th of August, I bet you if you go back and I'll do it right now, but I bet you if you go back and checked the chat history on the 9th of August, yeah, I posted it on the 5th and then the 10th. And I'm sure we posted it without tagging it as well, because we were talking about it those entire day, or both of those days. That's unfortunate, but it was a hard trade to take because we're already in a bunch of trades in tech, so you don't want to like overweight yourself. So I'm not necessarily upset nobody took it, but Honeywell up and over 200-day moving average. If you want to look at it again on Monday, though, shout it out and we can look at it together. Morgan Stanley up and over the 200-day moving average. refreshing the scan here. Let's go through. God, is there a worse Twitter account than Unusual Whales and Market Rebellion? Just retweeting the same fucking trash over and over. I had to stop following Unusual Whales. I have no idea. I have no opinion of him as a person, but that fucking service is the most annoying shit I've ever seen in my life. I could not deal with it. I had him followed because Bloomberg was on vacation, and as soon as Bloomberg came back, I saw the first tweet from Unusual Whales. It was him like retweeting a 2% win from somebody calling out the options fall. I was like, I can't deal with this shit. Unfollow. Like, fucking, it's the most fucking obnoxious thing I've ever seen.
So just for some BRB practice, check out PayPal.
Okay. So where's the BRB? Excuse me. Marcos, I just saw you post that. We'll get this as soon as Landon's done. So give me a price point on the BRB.
I think I'm still kind of confused on a BRB. You wait to take it. You wait to fully add into a position once it breaks.
No, you can. That's not. Yeah. So no. So the BRB itself is we wait for a breakout on high volume, right? And generally speaking, it's going to be a horizontal level. It doesn't always have to be, but horizontal levels are the best performing levels statistically speaking. That's why most of our setups are based off those. Okay. You have a horizontal level, you get the breakout, you look at your RVol, which is your relative volume. If it's over 1, then you know statistically there's a high chance that it's going to pull back the very next session if you're on the daily. So, for example, PayPal, the level that I'd be looking at was somewhere around, like, I don't know, 88.5-ish. 88.5 I think is an area for PayPal that I would have been looking at as a potential, okay, we're up and over this, we're starting to hit higher highs. This is something to take note. But the problem is you got the gap up, and there was no real opportunity to get filled on a BRB because we didn't come back and retest that exact level. And that's the other part of the actual setup is, remember, we use support and resistance areas not as precise points on the chart. For example, if I told you there's support at 90, if something dips down to 89, 95, you're not going to go support's broken. We're not scalping. We're not looking at level 2 data. Like, we don't need to worry about bid and ask walls being pulled. We don't do any of that shit. So if something slips by 5 cents, motherfucker, that support level is still there. That's why we put that square around it to remind people that it's a zone. It's not necessarily a specific price point. So, yeah, PayPal, $88.5, $89. We never got the pullback to that level, and therefore this is not a BRB. But I will say, off of the August 2nd close, the volume on the day was over 1 RVol, and then obviously we gapped up post earnings. I'm assuming they did it after. Yeah, so the gap up was because of earnings the previous night before, so there was no real opportunity for this to be a BRB unless it pulled back to 89, and we never did. We pulled back to 94. So
Gotcha. So the statistically now, since it did BRB,
it did not BRB.
right? The statistics aren't there for it to be like a successful breakout.
No.
Like, it still could, obviously, but
So breakouts, the fact that something pulls back and retests a horizontal level break. So the entire idea of a BRB is a resistance level gets broken to the upside, gets pulled back, tested as support, and then the trend continues to the upside. That's the entire idea of a BRB.
that, like, people
Yeah, exactly. It could be, yes.
adding in.
Yes, it could be people taking advantage of pre-running the breakout. It could be, yeah.
Their price target.
Yep.
And then they waited, and then it hit their price target, and then it went past their price target, so their price target became their new stop loss.
Could be.
And then it retraces back to that stop loss, and then or something.
Yeah, that could be. I mean, if there's obviously some sort of behavior attached to that statistic. So yeah, you're absolutely right. There's some sentiment and behavior. I tend to think it's because people were front running the breakout. They get the breakout, and then the very next session they're happy with the profit. They close. It gets a short term sell off. You come back, and it doesn't matter if you're trading on the 1 minute chart, the 1 hour chart, the 1 day chart, or the 1 month chart. SR flips are fractal in nature, meaning they play out across every single time frame, right? So if you get a strong resistance level that's broken to the upside on high volume, odds are that flips on a confirmation of a bounce, which is obviously price coming back, testing that area, and then continuing. The important part here for the BRB, and I'm drawing this on the stream for everybody, is that the trend needs to continue up. So if this thing bounces for a day or two and then fails, maybe that was a BRB that failed. And I do want to point out that statistically speaking, BRBs are around a 66% chance of happening. So you might come up with that 33, 34% that never fully retraces and you miss out on a trade. It happens frequently. Actually, happens 1 out of every 3. So
yeah, I want to make a point also, going back to the original PayPal, when I was looking at it, if I would have originally looked at it with a candlestick chart instead of a line chart, I probably would have come up with the same thing as you. But
yeah, line charts are going to be a little different than candlestick, which is fine. Remember, line charts are great for oh, okay, got it.
I always use both. When I first looked at it, I was looking at the line chart, and I usually, I don't know. Before I take a trade, I look at all the different charts.
Sure, makes sense.
Yeah, now the gap, it's like when the gap is there, when you see it, the level is much more obvious.
Line charts are great, but they don't show the whole thing. Just like candle charts are great, but they don't show the whole thing, right? If you can use both and you understand the premise of both, it's only going to benefit you in the long run. So, let's see if there's any news here. My boy Trading ZZZ, Twitter. This kid's dope. 17 years old, from some European country. I can't imagine trading from Europe. That's why when Tattered hops on, I always give him as much attention as I can, because it's like 10 a.m. for me and it's like 6 p.m. for him. So 2 or 3 hours into the session, it's already time to go to sleep for him.
Apparently I don't live in Europe.
Oh, well, I don't know. Is England part of Europe?
No, we left.
Exactly. I'm pretty sure you guys fucking left.
Wait, I hope you're joking. You're smarter than that, right?
I don't know. You tell me.
I don't know, bro. You're American. No, I'm not gonna say.
You son of a bitch.
I forgot we're live streaming shit.
Hanno, do you have any questions regarding open positions that you're in, or positions that you're looking at taking at the end?
I'm thinking about closing my target position soon because of the dividends. Well, at least one of them. I have 2 right now.
Okay, so let's talk through this really quick on stream and just for everybody in here to see this. So you bought what was the contract setup that you bought?
195 200 October.
So you have lots of time here targeting a potential gap fill. You took it above 165 and you bought it on a pullback day.
Yes.
So you're currently up minor in these.
I'm up 37%.
Cool. So 37% winner in target, and you want to close how many?
Just one. I want to just hold on and see where else it will go in case it does.
Do you have two sets?
I have 2 contracts
of each. Yeah. So, okay. So you want to lock one in right now at around 35%, and then let the other one run potentially to see what happens. And
yeah, see what happens.
Okay, I think it's a good idea. If you're worried about dividends, for anybody watching the stream, typically what we see when divs get kicked out is that you see short-term price fluctuations to the downside by the amount of the dividend as people sell it off after they get it. It's generally doesn't last, and if trends are still up, dividends don't typically affect that, but earnings are right afterwards, right? So you're kind of like kicked with a double whammy. Earnings are on the 17th. Yeah, so if you want to lock one in and pad some profit in case you get a potential pullback, it'll give you an opportunity to hold those targets a little longer if you do get a pullback, because you'll be able to pad that profitability starting today or Monday, depending on when you close. So if let's say their next position draws down and you get back to zero, well, you're still up in profit technically on the entire position. So you can actually make the decision then, do you want to hold it still or do you want to close it, etc. So it gives you a little bit more breathing room. You're going to close it today after the session, or you're going to close it on Monday?
I think Monday. I'm gonna see.
All right.
I don't see any reason for it to go back down till dividends hit. So.
Yeah, I don't think so either. And XRT today is actually looking fantastic. So yeah, I'm in. Go ahead.
Pepsi is probably the only chart I'm looking at right now. Retesting that.
Yeah.
all-time high.
I think we're going to talk through this on Sunday. If somebody wants to front run Pepsi, feel free. I do not endorse it, but I could also be the asshole where this thing gaps up on Monday. And well, let's talk through Pepsi really quick since we're streaming anyway. We got 15 minutes. Let's look at us. Let's look at a Pepsi play. We're obviously not buying the Septembers. That's out of the question now. My 1.618 fibs up at 19150. So you're probably going to be looking at Octobers, and realistically, you don't need to spread this if you don't want to. It's a 22 IV at a 13.6 IVR, so you don't need to technically spread this unless it's to bring down the cost. The 0.28 fib or not the 0.28, the 0.28 delta in the Octobers, going to run you 208 for a 185 call. So you're right smack dab in the middle-ish of the move to the upside. You can get this for 208, or you can spread this. You can buy the 185 and sell the 190, and you're getting a 3.5 to 1 R to R. Costs you $1.10 for max profit of 390 and a P50 of 63. So 63% chance this thing hits 50%. It's going to cost you $1.10 for max profit of 390. So a little bit more than about a 3.5 to 1-ish. Not a bad setup, but understand that you'd be front running this, right? We want to buy it above 17750. I do like the name, though. I'm telling you right now, I do like the name. You're trending above the 50 RSI since late June. You're testing an all-time high. The market is rewarding this type of shit right now. So, and realistically, if you're buying the 185, 190, you're about 6 to 7% away from max profitability on a 1.5 ADR. You're looking for 3 or 4 perfect days, and you have, till fucking October. You have 70 days on these. Not the fucking worst idea.
Check out that Vizio chart.
Oh shit, hang on. Before I do that, I need to look at Beyond because Marcos posted and forgot. Marcos, what do you see here with Beyond?
I see a BRB here at the 36 area. I got a heavy volume breakout on the 5th, and I've just kind of been pulling back, kind of doing like a little bull flag, it looks like. Kind of see like a kind of cup and handle type of or rounded bottom pattern here.
I'll be the first to
just
say
playing
this
the BRB.
is fucking ugly. Can I be the first one to say that? Like, this chart is ugly. I see exactly what you're saying. I can see the little cup and handle. And I know that, I think it's you that likes to play the retracement rule on the handle, right? If I'm not mistaken.
I played it on XPEV, it didn't work.
Yeah, no, don't worry. One trade isn't going to define a strategy set.
That's risky because you're buying it on a rejection of the breakout, basically, hoping that it's going to be a handle. But if it's not, then it's just...
No. He did it the other way. He did it the other way, where he was buying the dip in the handle and and then expecting it to reverse back up into a breakout. But either way, I can see the pseudo cup and handle. I don't love it, but let's see what the options chain looks like and if the R to R is there. I will say right now that why the hell? Okay, let me ask the most important question here. Why would you want to be buying Beyond when it's one of the only names that is fucking red on the day? And as a matter of fact, it's down from its peak 18 or 19% in the last this week. This week we peaked at 44.67-ish, and we're currently at 36.65. We're down 18% this week. That's 5 straight trading days of basically down. Every other name in this fucking market is up. So that's the one thing that I'll point out right away, is that there's definitely some relative weakness in Beyond.
So I just closed my first Vizio call for like 60%. It was only like $20, but it was a really cheap call. But I'm probably gonna add back in right now. I like how it's consolidating above the 200-day. Had really strong earnings. RSI breakout. Had a 215% EPS.
So here's a good, I think you just said this, BRB practice. I'm going to post this chart in Discord. Where's the BRB on this? If you're watching the stream right now, it's right there. Where's the BRB on this, Landon? Give me a price.
I posted 2 that I saw. I saw I put a 1 on my chart where I saw the one that I figured you would point out.
Give me a price point, though.
Like 975 probably.
Cool. That's fine. I think, yeah, okay. We're in the right, that's the right idea. My level is somewhere around $9.85 or $10. If you would have said anywhere between $10 and $9.75, that's a BRB.
If I played it, I would have probably taken 10 because I typically go with whole numbers.
Yeah, that's totally fine. So, yep, that's a BRB. Yeah, there's lots of different ways to come up with price targets. You can use fib extensions, which is what I love to do, but also I like to look at previous levels, right? The oscillations in my mind matter. Price is just history of interaction of buyers and sellers. So at some point in the recent past, if there was sticky price action at, let's say, 12 on the Vizio chart, it was support at one point and then we broke it. Well, what happens when we get back up there at 12? It wasn't that long ago that we were arguing about 12 to the downside. Now we're arguing at 12 on the upside. So I posted a fib extension here. Fib extensions are easy to use. They're not magic or anything, but they do get the math correct when it comes to positioning yourself. They're always going to get around a 3-to-1 if you're using that 1.618 fib in the 786 stop area, shit like that. And in my mind, it's extra credit when levels, previous levels that have obviously already formed, match up with fib extensions. And so what I just posted here randomly on Vizio is you get range high at 986, which is where the horizontal level that I already had was. Range low at 648, which is the bottom of the fucking range. And look at those levels. The 1.618 fib lines up with the previous support area at around $12. The 2.618 fib, which is the next price target, lines up with the top of the next consolidation phase. In my mind, that's not coincidence. And so I would use those areas as areas of new levels. So in this case, anything sub 12 is no longer bullish in Vizio. I would expect $12 to be the new base before the leg up to 15.5. Could you do something dumb and annoying and put a ray arrow showing what direction you made the diagonal line? Do you still want that? No, I just had it on a few sessions ago and I turned it off. You're talking about the trend line, right? I just posted it.
I actually do also like that Beyond chart.
You guys are crazy, but if you want to take it, feel free. I mean, Marcos took UPS and UNP after I was like, man, maybe those aren't the best setups. He shit on me, so that's fine.
Personally, I hate the idea of Beyond Meat. I don't think I think it was bad. I think the idea of it is bad. I mean, I think.
Oh yeah, I hate the.
I think your kids are gonna be eating bugs, and they're gonna fucking love it, man.
They might, but like, I don't think so because this is America. We eat steak too, so.
I just saw stats like yesterday or 2 days ago that chicken has been trending up and is America's #1 meat of choice for like the last 50 fucking years. And we eat more chicken than like all other meat combined or something like that. I might be wrong, but we eat a shit ton of chicken. So
Not Gramps, dude. France wouldn't touch the stuff.
Chicken's the best.
Yeah, I like chicken.
Hammy, what's the indicator on the top right again?
It's the one that Mike made. You can find it in the Scripps channel. It's the Ian Stock Health Box.
Ian Stock. Okay.
Yeah, just copy that into your Pine editor and then save it and then click Add to Chart.
Okay.
Yeah, I remember that story. And I have a similar story of like that. It's not as brutal as yours, though. But yeah, I like chicken. I had a choripan for lunch. Not as good as the one in Buenos Aires, but still good.
Yeah, that Beyond.
Liking the taste of chicken. Like, the taste of anything.
What's up with Beyond?
Beyond the contract's the only viable option really. It's the September 16th because I was looking at November 18th, and there's no volume to get the ideal price targets. So, and I think it's kind of cutting it close. September 16th.
Did someone just take Vizio after I talked about it?
I did not.
Okay.
I mean, the only thing that I can see that would maybe like pass the sniff test is the 40-45 call debit spread for $97, and you get a max profit of 403, so you get a little bit better than a 4-1. I just don't love the Beyond chart. I don't like the fact that everything this week has gone up and Beyond has gone down, and it's not just like a little bit. Beyond has come down nearly 20% over 5 days, and it's not just like 1 day pullback. It's for whatever reason the market has been selling this off. Why would you want to, in my mind, and this is not me telling you don't do it, by the way, but I'm going to argue my case, Marcos, and why would you want to buy Beyond, which is is it a XLY name?
Good question.
Let's look at it really quick. We only have a few minutes left. BYND.
Oh shit! Yeah, I'm gonna take this Vizio. I'm sorry, I know I'm interrupt, but just because we're short on time. Yeah, I was just gonna say really quick. Like, obviously, you want to look at option chains all the time, and it can be considered like the same as like reading tarot cards or whatever they're called. But or like palm reading, whatever. But I think that they try to like hide stuff in the option chain on volume and open interest. And there's always like hedges and stuff. But like, if you see a contract with like five open interest and like 20 volume, and you see like that type of contract, that type of ratio kind of peppered throughout the whole option chain on the call side, like it doesn't look like institutional hedging or buying. It's not huge numbers at a time, you know what I mean? It's really small. I don't see that kind of thing often. It's either like the ratio is either like if you get more volume than open interest, it's almost always like thousands and thousands. You don't get like a bunch of strikes with like a couple more volume.
Let me Beyond is apparently a Staples name. It doesn't have any substantial exposure into any sector industry ETFs that I can see. But just to preface my point, over the last month, you have names like ADM up 18.74, EL up 12.69, you have LW up 10.39, and it's just like, I don't know, you go back, I don't know, this is probably going to be up a decent amount off of it's up 23% per month, but it's still down 17% over the last 5 days. Don't take my word for it. It's not something I would want to own, though.
And also,
FSLR just hit a 50-day high.
the candlestick pattern beyond definitely looks like three black crows. I mean, not that I give a ton of credence to that, but I mean, if other traders do, then I think that's a little bit of selling there.
Dude, I agree with Sal, man. You guys would not last down here if you don't eat chicken. They grow their own chickens and like fucking murk them in the backyard, and you're eating them for dinner. I can't stand it, but
Why the chickens just run around in the wild?
Yeah.
The hurricanes.
I can't handle it. They're like, hey, dude, I got invited to Fogo de Chão where they like kill the pig and drain it and stuff, and I'm like, I'm good, bro. I don't want to fucking. It's like a thing guys do down here. They like drink beer and kill a pig and fucking fillet it and cook it. I'm like, I'm good. Just let me know when it's done. I'll eat it. I don't want to fucking do it. PCT, Pure Cycle Technologies. Marcos posted this. Industrial Services, Environmental. 6.64 ADR. Market cap at 1 point. So it's a small cap industrial name breaking out on high volume on good earnings. BRB setup is where, Marcos? Probably 10. Call it $10 square.
Yeah, $10.
Yeah.
Is where I look to get that.
Cool. Okay, this will be on the scans from on Sunday. So pull up a trading idea then. All right, guys. Session's about to close. I appreciate you. Thanks for letting me do what I had to do this morning. I hope everyone's had a good week. It seems like everyone's had a good week. If you guys want to schedule one-on-ones, feel free to DM me. We have a new member in here, Tim. He's already scheduled for Sunday morning. If anybody else wants to, feel free. I'm going to go ahead and stop the stream really quick. If you're watching the stream right now, feel free, leave a comment. Let me know, what do you think? Are we just fucking completely wrong about Beyond? Is Marcos and Hino right? Like, what's going on? You can talk as much shit as you want. I like to read the